Welcome back, folks. We got the S&Ps off 99 points, trading at 58.60. Markets in the red. We have yield spiking. Great day to have our man Shawn Edwards back on the program. Shawn is a vice president, institutional ETF strategist with Direxion, and we're going to talk some ETFs. And man, quite a day as usual. Shawn Edwards, welcome back to TFNN.
Thank you, Tommy. Thank you for having me back. The last time I was on the show, tariffs were sky high. Our assets were around $40 billion. Now our assets are back up to around $50 billion. I wanted to start there just because we've seen with this latest 90-day tariff pause, there's a risk-on environment. So traders are back in the market and they're looking to trade leverage and inverse ETFs. So definitely thank you for having me back on, and happy to talk through some of those flows that we're seeing within our fund currently.
You know, I love it. And I was thinking, Shawn, maybe, we're coming into Memorial Day. Maybe we'll get some calmness, not the action. And a lot of what we're going to talk about, driving some of the action, of course, today. Let's start with just the market, man. We have the market, people, whether they're trading ETFs. You guys have such a great suite of ETFs, but talking big picture, whether you're talking indices, but talk to me about what you guys are seeing. You have 50 billion from 40. My goodness, quite a month. Go for it.
No, absolutely. As I mentioned, risk-on environments for traders. Once we got the news that there's going to be a 90-day pause leading to that risk-on environment, we've seen fund flows, and in particular, whether you're bullish or bearish, the U.S. or China. Just staying on the topic of the tariffs. Again, it's between the U.S. and China, they agreed to suspend tariffs on goods. So that is ultimately leading to a thawing of trade tensions between two of the world's largest economies. So if you are looking to trade U.S. or China, you can look at trading opportunities with Direxion ETFs. And again, just to highlight, we do have leverage ETFs or tactical short-term trading tools that provide daily exposure, enhanced exposure to an underlying index. And I'll just start with SPXL and SPXS. So whether you're bullish or bearish, the S&P 500, you can look at trading SPXL or SPXS. So if you're bullish, you can look at trading SPXL. If you're bearish, you can look at trading SPXS. If you want 2x exposure to the S&P 500, you can look at SPUU. And then just to round out, if you are bearish, the S&P 500, you can look at ticker symbol SPDN. And then moving over to China, broadly speaking, and traded China's volatility, if you want to trade the 50 largest and most liquid Chinese companies, you can look at ticker symbols yin and yang. So again, I mentioned a little bit earlier, seeing our assets, grow roughly $10 billion within the past week. Again, that's to inflows, but also market appreciation. You can look at yin and yang. Yin was one of those beneficiaries. So again, that ticker symbol is YINN, and that gives you exposure to the FTSE China 50 index. So again, if you're bullish, China, and you want to trade the 50 largest and most liquid companies within that particular index, you can look at Ying. And if you're bearish, you can look at ticker symbol Yang, YANG. So give me that same exposure. And just staying in China, you can look at ticker symbol CWEB if you are interested in trading some of the largest internet-related businesses within China. Again, that ticker symbol is CWEB. And then rounding it out, if you want broad China exposure, if you want to trade the largest, most liquid stocks, you can look at trading ticker symbol CHAU. That's Chow. That's the Direxion Daily CSI 300 China A shares Bull 2X ETF. Again, the 300 largest and most liquid stocks in China. So a lot of ticker symbols, as I always say, tactical short-term trading tools. Just giving you ideas if you're looking to trade for trading ideas around tariffs between the U.S. and China and broad U.S. and broad China volatility. You can look at those names.
Pretty cool, man. And I was jumping through those charts, and I appreciate you going through them as you were listing them off. And boy, when you talk about the leveraged S&P, ETFs. That SPXL, almost a double bagger from the lows, from what, 87 to almost 160. You're pulling back today, of course, and even the double from about 100 to 140, up 40% and I just say just a double, but to be up 40% in a month, my goodness, remarkable accelerations, man. And we know why traders enjoy those vehicles when, my goodness, you're getting that type of action in a 30-day period on something like the S&P 500, where we live in interesting times.
Yeah, absolutely.
We were going to talk about Moody's anyway. It just keeps going, man. It's only Wednesday, but this yield story, and boy, I know you guys got TMF, TMV. I was looking forward to talking to these as well as some shorter-term duration ETFs, but I think a lot of traders paying attention to fixed income right now. Let's talk some fixed income, some 20-year Treasury if we can.
No, absolutely, Tommy. And as you mentioned, we saw that Moody's downgraded the U.S. credit rating from AA1 to AAA. And that's just due to rising deficits, higher debt rollover costs, and elevated interest rates. So that's led to increased bond selling, driving yields up above 5%. As we see yields approaching 5, and if it goes above 5%, you could probably, make the assumption that you'll see more traders navigate away from equities until fixed income as well. But what we're seeing is a contrarian play. So the ticker that you mentioned a little bit earlier, TMF and TMV, that gives you exposure to the ICE Treasury 20-plus year bond index. So one of the beneficiaries of inflows within the past week has been TMF. So again, if you have traders that are bullish bond prices, so if you believe that rates will drop, and on Monday we saw that Atlanta Fed President Boswell stated that he prefers only one rate cut this year as the central bank tries to balance, the upward pressures of inflation and worries of a recession. So if you believe that there is going to be a rate cut, you would look at trading TMF. And so again, you're betting against bullish bond prices and believing that rates will drop. If you're bearish and you think that bond prices will decline but rates will increase, you can look at ticker symbol TMV. So that's the longer end of the curve. As you mentioned, Tommy, we do have some shorter duration products as well. If you want to trade the 7 to 10 year Treasury bond index, you will look at ticker symbol TYO, which is the Bull 3X ETF that gives you exposure to the 7 to 10 year Treasury bond index. Or if you're bearish, you will look at TYD, which gives you 3X daily exposure to the 7 to 10 year Treasury bond index. So again, what we've seen within the past week, contrarian plays, you have traders that are betting against falling rates. So they're trading TMF.
Pretty remarkable moves again on those ETFs. I mean, fixed income, and I was looking at TMV, of course, the one that's been appreciating recently, and you're talking about what, up almost 30% from where we were 6 weeks ago as you were chopping around from March and April. Just huge moves, man. And then if we could talk a little retail, it's so great. The ETF lineup you guys have, you're a sponsor, I know you are, but I love your products, man. And no matter where you are in this market, you can find some great ETFs. And, I was just talking about Target at the beginning of the show, of course, some weak numbers from Target, retail, Home Depot, Lowe's. But talk to me a little bit about retail, Shawn, please.
No, absolutely, Tommy. So again, retail earnings are underway this week. And we're seeing the impact that tariffs and shifting customer sentiment is having on names like Target, as you mentioned. You see that they've reduced their outlook for the year as a result of tariffs and shifting customer sentiment. So we'll see the impact that has on Target, but not only Target, Home Depot, TJ Maxx, Ross, Advanced Auto Parts, Lowe's, BJ's, Williams-Sonoma. These are all retail names that are scheduled to report earnings this week. So if you are interested in trading those retail names in just the broader retail sector and broader consumer discretionary sector, you can look at ticker symbol RETL. As you mentioned, we do have products. So depending on where you are looking, we probably have a product for you. So again, that ticker symbol is RETL. That's the Direxion Daily Retail Bull 3X ETF. 3X bull exposure on a daily basis to the movement of the retail sector. And then if you want more exposure to some retail names, but more specifically consumer discretionary sector, you can look at ticker symbol WANT. And that's the Direxion Daily Consumer Discretionary Bull 3X ETF. So again, names like Williams-Sonoma and Home Depot within that particular fund. So again, trading ideas As we know, tariffs are having quite an impact on the retail names, shifting customer sentiment. We see that Target made a note of, customer sentiment impacting their growth projections for the year as well. So if you are looking to trade retail names or consumer discretionary names, you can look at ticker symbol RETL and WANT. Again, short-term tactical trading tools. You definitely want to monitor your trades daily, as they are not meant to be held long-term without actively monitoring your position there.
Daily investment vehicles, folks. That's right. But boy, we got some moves, man. And those stocks, Williams-Sonoma, you talk about some roller coasters, man, during those tariffs. That stock in particular, quite
Absolutely.
a roller coaster. But I was going through those ETFs. Retail, man, RETL, from $10 down to $4 and almost back to $8. Well, Shawn, congratulations to you and the team, man. $50 billion from 40. I know you guys have an outstanding lineup of products. I appreciate you coming on the program as always, man. And boy, if that's what we can do in a month, what are we going to be at next month when I tied? No, I appreciate it, man. We look forward to having you back on the program, Shawn.
No problem, Tommy. Thanks a lot. Have a good one.
Thanks so much.